Hey, it's Dr. John Terry, and welcome to another installment of the Tune Into Sales podcast. All of us at Legacy Marketing Group are so excited to have the opportunity to bring this ongoing series to you. We get an opportunity to talk to some amazing people, get an opportunity to hear their story and how they're making a difference in the financial services community. And today, I get an opportunity to interview one of my favorite people in the whole wide world. She and her husband have just become really dear friends in the time I've got to know them. I love what they're doing and looking forward to having an opportunity to talk about an odd subject that maybe we bring into a sales conversation, but it's about administration. It's about paperwork. It's about systems and processes and why they're important. So I'd like to welcome to the stage and welcome to the podcast today, Miss Katelyn Graham. Katelyn, good morning. How are you?
Good morning, Dr. John. I'm doing great. How are you doing?
I am doing fantastic, and I am so excited to have you in the room. Now, Katelyn, I want to jump in because we've got a lot to talk about and only a limited amount of time to do that. Now, you run a company called The Admin Effect. I love the name of that. And as I've had an opportunity to follow what you're doing online, I'm one of your raving fans in terms of what you're bringing to the marketplace to make a difference. What is the admin effect, and why is the admin effect really becoming the darling of the financial services industry?
Well, the admin effect was grown and based off of working as virtual operations in advisors' back office. I come from the IMO space, and when I was at the IMO, I really thought I knew what was happening in advisor offices, but it wasn't until I was working as boots on the ground, well, really as virtual ops, that I started to understand the disconnects and the things that were happening in the back office. And it didn't really have to be that way. And one of the big gaps was the training and resources provided to their staff. So we now do the work in advisor back offices, but we also train their staff because, again, there's not a lot of resources to do that particular job in the advisor's back office. It's very unique.
Absolutely. And you know, I come from a sales background, as does your husband, and I know that you've been involved in the IMO space for a while. Sales are the lifeblood of any organization. But one of the things that I teach when I go out and teach sales and marketing is the fact that when it comes to push comes to shove and, you know, stressors begin to happen, deadlines begin to show up, we don't rise to the level of our training. We fall to the level of our systems and processes. Mm-hmm. And when those systems and processes are either incorrect, incomplete, or don't exist, it really impacts how successful we can be in sales. Now,
Yes,
as we look at the industry, what would you say the number one roadblock to financial professionals, insurance, investment advisor, broker dealer, pick the flavor? What would you say is one of their number one challenges that they're running into that's really stymieing their success? Or, you know, what are they doing? Another way to put it is, what are they doing they're putting a roadblock in their own way?
Our financial advisors are mainly, they're more of that sales mind, right? They're type A. They want to meet with their clients and they do a really good job of that. They are the sales. So I call that like the horsepower, right? So if you're picturing like a sports car, the sales, that's that horsepower, right? That's the thing that ramps it up. And that's how you end up, that's where that funnels in. As far as the engine, that is your systems, your processes, your team, the people that are processing all that business or serving your clients, like that is the engine. So what happens when the engine is broken? Does the horsepower really matter that much? You have to have the engine that works to support the horsepower.
So when we look at sales professionals in our industry and we think about the sales process, if I were to pick one area where they're really struggling the most right now, what would that be? What are you seeing at the admin effect?
Their data gathering process or, building process around their sales process. So every advisor has their appointment process. They have their sales process. Let's say it could be, I meet with my client 3 times before I close and make that sale, or I could be someone who meets them once or twice. But through that process where where they're lacking in a lot of offices that we come in is what they should be obtaining from the clients at each stage of that process. So once that client walks out the door, and if you haven't gathered everything that is going to go on to an annuity application, or if you are managing money on the AUM side, if you don't gather all that information and they walk out the door, you have a higher chance of losing that sale because you're not able to facilitate all of the paperwork right after that and get in touch with the client. If you're chasing them down after they've walked out that door, there's a high probability that you could end up losing that sale. So we teach a lot about the data gathering process. We teach admin how to build the process around the advisor sales process, because typically, they're not going to change their sales process. So how do we get what we need on the front end? So then we have all the information to fill out all the paperwork and work with the clients to get it up clean to the insurance carriers through that process. But it all starts at the beginning. It starts through the sales appointment process. So that is the place where, again, we hone in on, because I call it garbage in, garbage out. If what we're obtaining on the front end isn't going to be what needs to go on the applications, then, we're going to have NIGOs.
Right. So is it that they're not asking the right questions, or have they not thought through the questions they need to ask and have put that into a system or a checklist that they can follow so they get what they need, so they don't have to keep going back and asking for more? Is it one, or is it a little of both?
It's definitely they're not obtaining it through that process. So there should be certain touch points. So really, it is the process. So if they don't have a clear process, you should be able to set clear expectations to the client on the front end of what happens in each appointment throughout, what happens as soon as you're moving forward with paperwork, all the way through that process. And we find there's not a lot of that going on in these offices.
Gotcha. Now, do you find that most advisors have a system that they follow from the pre-appointment process to the first appointment process to the follow-up and delivering the solution? Do you find that they wing it more often than they should, or do you find that they've got bits and pieces, but they haven't put it all together so it's cohesive? What do you see?
Bingo, the last one, because they have a process, but a lot of times it lives in their head, and they're not sharing it with others, or they're obtaining this information that they don't know what then needs to go on an annuity application. They might have everything they need to do the plan, but it's really getting that process out of your head, knowing that you have the process, and then allowing your team to build in touch points around your sales appointment process to make sure that they're getting everything on the front end. Because the last thing you want is to be chasing down a client when they've already said yes, and now they're on vacation in Europe for 2 months, and you're trying to get all the information to finish up the paperwork. It's just wasted time if you're not getting everything on that front end.
Absolutely. And Katelyn, I think you brought up a valid point. They've got it in their head, but they don't have it on paper. Mm-hmm. And if they don't have it on paper and they get to the point they've got to hire staff, how are they going to train staff on a process that doesn't exist on paper or in a digital document somewhere that they can show a staff member these are the steps in the process to get us from point A to point B, so we ultimately move that individual from being a suspect to a prospect to an opportunity to become a client? That's missing in the marketplace. And I think that's one of the big fallacies and one of the major faux pas that our industry overlooks consistently. Would you agree with that?
Agree 1,000,000%. You hit the nail on the head.
And so the solution to that is what?
The solution is to hire the admin effect.
Important to get those processes documented.
It really is. It's called who, not how. So, their talents as a financial advisor doesn't necessarily translate over to hiring, training, and building out process within their own firm. And I can relate to a lot of these financial advisors because I am a business owner. At the end of the day, they're a business owner. So when they start hiring staff, it's really hard to train someone on a job that you don't really even know how to do very well. So know your resources, because there are firms like mine out there that can help build out those processes, set their team up for success. I would be interested if there was a study or something that showed how many back office support folks, when an advisor is hiring them, how many have worked in an advisor office before? That would be a really interesting statistic to have, because what I find is typically they're not from our industry, or if they are, they're in a very segmented position where, if I work for, let's say, an IMO and I'm in annuity case management, that doesn't necessarily translate right over into an advisor back office. There's a lot to learn behind there. So I always say it's a very unique job to work in an operations position in a financial advisor's back office.
Absolutely. Yeah. Well, if failing to document processes is the number one roadblock that advisors put in their own way, if you were to look at the experience that you and the admin effect have, what would you say is the number two problem that we see many advisors and agents overlooking in their business that goes beyond just not documenting process? What would you say is the second saboteur that they put in their own way?
I'd say knowing what to track. So traditionally, our financial advisors, they're tracking their marketing dollars, their, what they're paying out on the sales side, but they're not necessarily tracking what happens after they make that sale. So one thing that we teach offices is you need to be paying attention to the moment the advisor makes that sale, to the very first touch point with that client after the sale. So if we're going to facilitate the next steps, let's say we're putting money into an annuity, we're putting money into Fidelity. Well, that next touch point matters. So we've gone into offices where it's taking 5 to 7 days for that office to reach out to that client. That's a big window of time for that client to all of a sudden have a ton of questions, want to meet with the advisor again. So tracking from the point of sale to the first touch point, whether it's facilitating that paperwork, to how long it's taking to fund either the AUM or annuities. How long is it taking there? So if we're not tracking those numbers, people don't even know their cycle times and why it's taking them so long to get paid. So again, point of sale to the first touch point, paperwork going up, to how long it's taking to fund the AUM or annuities. Those are very, very important. So when we come into organizations, we are looking at those numbers because our goal is to cut that time frame down significantly.
Absolutely. Now, one of your phrases that I love, and we talked about this early on in your business model, was NIGOs to IGOs. Mm-hmm. And I love that phrase. But I don't know, for those that haven't really thought through what that means and the value of getting an application to the home office in good order. When you first start working with an advisor group, an agent group, or an agency, whatever it may be, what do you see as far as percentage of business in good order versus business not in good order? And again, is it processes? Is it systems? What's the problem?
Well, I have a really good example, actually. So I'm hosting trainings here at our office for advisor back office staff. And we had some folks in, and this one gentleman, he had been working for this advisor office for maybe 4 weeks before he came out to our training. And one of the first things he was handed was a replacement application. Now, just saying, when I ask, what do you think a replacement application entails? What is one thing that you really have to know in order to fill out a replacement application?
You got to know where the money's coming from.
That, and you have to know product. You have to understand what is the client going into, where is the money coming from, and what are the features of those products. If I don't know annuity products and I'm going to go try to fill out an annuity replacement application, I'm going to get a ton of NIGOs because I don't even know what these products are. How do I answer these questions? That is the reality of what's happening in these back offices. And then advisors get frustrated with these folks because they're like, annuity apps are so easy. Well, they're really not. I know at one point in time, they were maybe well, I think they're actually in the back of a magazine, a one pager that someone could fill out and submit. Then maybe they're 4 pages. Well, now it's 60 pages of information that the carrier wants to know. What are the client's objectives? What's their current financial situation? What are they looking to do? If it's coming from somewhere, they want to make sure that the client knows what they're giving up to then go into this new product. It's really important stuff. And you can't have someone who's inexperienced try to fill out paperwork, because they're going to get a ton of NIGOs and it creates a poor client experience at the end of the day.
Do you find paperwork issues also being a problem? I know suitability is a big issue. And, as we're a regulated industry, we see suitability continuing to expand, making sure that the agent or advisor is doing the right thing with respect to the client. But do you find that there's a lot of little major mistakes or minor mistakes that keep happening over and over and over that cause those NIGOs not to happen?
Yes. So I always say our industry does not make it easy for people to do this job. A lot of these advisors are using multiple carriers, different products, and there's absolutely no consistency in our space when it comes to these applications or, even what certain carriers interpret on applications. So it's not easy to fill this out. In my course, I even go over the different languages on different applications and how it means the same thing. So if you don't understand exactly what that is, it's hard to combat what's flying at you. So I would say, understanding what you're doing, understanding what these questions mean, understanding why someone would purchase these annuities, understanding the why behind everything is what will set someone up for success. Because the inconsistencies of, again, how things are asked, the different terminology. One carrier could call an income value a protected income value. Another could call it an income benefit base. Another one could call it just the income value. So you have to understand what that value means across the board versus getting tripped up by all the language that's out there also.
I 100% agree with that, and I remember as you were talking, I remember going back, I've been in this industry since the late 1980s. And I
wouldn't
remember
believe that.
I 29 and holding. What can I say? But back in the day, if we want to call it that, annuity applications when I started were one page. It was a one-page application, and on the back was the transfer paperwork. Today, it's 30, 40, 50, 60 pages to complete an application to satisfy all the state requirements to make sure we're doing what we need to do. And that becomes a problem. And it's one little box missed or one little phrase not explained, or as you said, not understanding the language and giving the carrier what they need to make an informed decision. All that slows the process down.
Well, and understanding that the suitability section on an application is utilized for multiple products. So the questions on there, if you don't know exactly what that product is for, you could be answering a ton of different questions wrong on there because it's a universal form. My example would be if, let's say someone's electing income and you need to understand that income rider, because an application can ask, when does the client plan to take distributions? And the answers may be 0 to 1 year, 1 year, or 2 to 5 years, 6 to 10, whatever it is. But if I select 0 to 1 and that rider you can't even turn on till the 5th year, then you're having to go back and get corrections on that application. Or you'd be questioning, is that even the product for them if they wanted it in the first year? But that's how easy it is. If someone doesn't understand the riders, if they don't understand the rules of this product, they're going to have a hard time filling out the suitability portion of the app.
100% agree with that. And I think too, I was at the Vault conference this last week with Patrick Bet-David, and he was telling a story of the early days of PHP, the big monstrosity that he built in the industry. And he was talking about the fact when he first got involved in the insurance business, he didn't understand systems and processes. And he said, I remember an application coming in, and he says, we're seeing this long delay time before people were getting paid. And he said, I asked my staff, how long does it take to process an application? And it was taking 4 days from the time that app hit to getting all the additional information from that agent that they needed to actually get everything they needed to put that file together, review it, make sure it was in good order, and then ultimately send it to the carrier. So think about the customer experience in that regard. If you're constantly having to go back to the consumer and ask them for, oh, now I need this, or oh, now I need that, or now I need this piece of information, what does that do in terms of your competency as that client looks at you? It begins to make them question, did I choose somebody who really knows what they're doing? And I think the same applies for staff as well. Would you agree?
Yes, 1,000,000%. I mean, being able to articulate to the client or build out the best processes, it starts with that understanding. But the client experience is so important, and it doesn't have to be where you're going back and forth, but you have to know what you need. You have to know what you should be obtaining. And again, you don't just show up and know an advisor back office. So instead of learning from trial and error over years and years, that is why I'm so passionate about sharing our knowledge with this space, because we can amp up how quickly they learn something, and they don't have to try to figure it out over a 10-year period, dealing with all the things that can happen from a poor data gathering process, or not understanding, again, the products or the things that need to go into these applications. I mean, something as simple, it seems simple now to me, but something I teach on is reading statements. Looking at a statement, what really do I need to know about this that applies to the annuity application? A client can bring in an account summary. Well, that's not the same thing as a statement. So understand that if you're getting that on the front end and you notice that that's not a statement, then you can combat that while the client is there, or before that next appointment that they're coming in. But you have to know that in order to combat those things to make that client experience better.
Yeah. So how does the admin side impact the annual review that should be taking place?
Well, the advisors typically are asking their staff to go obtain all the values, right? So it's really important to a financial advisor to have all of the values for their planning. So let's say they're looking at their RMDs or their income part of it. Like, they're looking at everything for like tax purposes, and they need all these values from everywhere to really look at their entire plan, and everything affects everything. So I've found, in training, that it's not really an entry-level position to just go call on values. They still have to know what they're calling on. They have to understand those products. They have to understand what these values mean. But so I'd say it's one of the most important jobs, is understanding that and being able to obtain the correct information from the carriers.
Absolutely. So let me pivot just a little bit, because I know many financial professionals, when they got in this industry, they were solopreneurs. And they began to grow their business, and maybe on the annuity side, maybe they've gone from being $1 million a year producer to now they're doing 3, 4, 5, and they realize they've got to hire staff because they can't grow because they're getting overwhelmed and they can't do everything they need to do.
Right.
And we talked about systems and processes and why they're important, but why is delegation of services so important? And why is empowering those team members you hire to go do what you've hired them to do? Why do so many financial professionals struggle to do that? And what does that cost them when they don't?
I always say knowing how isn't the same as showing how. So what I find is sometimes when advisors hire staff, they have a hard time training them. They don't have the actual role built out because they're just drowning. It's a good problem to have. They're growing. They have more business than they can handle themselves, but they're not really set up when they bring someone in that they have it written out exactly what that person's expected to do, and they don't have the proper training. So over time, that person, if they aren't living up to these expectations the advisor has, the advisor might look at them as an expense versus an investment into their firm, when really you need to invest in your people. You cannot continue to grow without staff. And that's just the reality of it. But you have to learn how to, like you said, delegate. But you have to have the resources to train them, because you're not going to delegate to people that don't know what they're doing. You're going to be just keeping the work, and then that's just a vicious cycle. So if they don't have the confidence to train their staff, that's why we exist, send them out to our training. But the only way you're going to continue to grow is by delegating, but you have to have that trust in your people to really delegate.
I agree. I think it's not just delegating. I think it's also equipping and empowering. Because if you
Exactly.
just say, okay, Katelyn, this is yours, and I don't teach you how to do it, I just set you up for failure. And as a result of
Exactly.
that, it makes you look bad. It makes me look bad. It makes my company look bad in front of my customers. That's a no-win scenario. But I think there's far too many financial advisors that don't think into what you're saying in terms of giving that associate that they bring on their team what they need to be successful so they can own that role and make that advisor look like Superman or Superwoman every time they walk in the door.
Exactly. Because what happens is if they hire one person and that person just starts taking some things over and then they continue to grow and they hire another person, well, now there's crossover in the role. Nothing's really mapped out. There's no role clarity. And I always say, if no one owns it, everyone feels it. So it's really important to have role clarity, have it mapped out what each person's doing and why it's so important to the vision and the whole entire organization.
So it really comes back to the why that you said earlier.
Mhm.
If they don't know why it's important, they're not going to know how to make it important.
Exactly. And I learned this from firsthand experience in growing my team in my firm. When I first started hiring, I hired a VP. I didn't know what I was meant by that at the time. I just knew I maybe wanted them to be helping manage a team of account executives. It took me about 2 years and running through the EOS, the Entrepreneurial Operating System, to really dive in and really take my vision and become clear on how I share that with my company, running them on systems, having that role clarity, mapping out what their contribution means to the big picture. That has just skyrocketed and that's the only reason I've been able to scale. You have to have that clarity. And even as things shift and change, to be able to say, this is why this is happening, and this is why we're moving in this direction, that everyone gets on board when they understand. It's that lack of understanding it can be detrimental to your staff, to the whole organization, to your clients at the end of the day.
So what I hear you saying is it's important to train, but as the organization continues to grow, that training has to evolve because as you bring on multiple team members, there's multiple dynamics in place. And if you want a high performance, non-leader dependent team where everybody's owning their responsibility, training has to be ongoing, correct?
Correct. 1,000,000%. But you have to understand what you're asking of your staff first.
And where does that start? Does that start with you as the financial professional, the business owner? Does it start with you?
Yes, they need to understand what they're hiring for, and they have to really map out those positions within their company. And maybe the first person you hire, you're not there yet. You really are just delegating certain things to get off your plate, but keeping that in the forefront of your brain to know as you grow, you are building out a structure within your company. And if you're not, then there's no clarity of what people are doing. And I've done consulting in advisor offices where I've come in and they have 3 people on the team and they have a senior director of ops and a director of ops and then a wealth advisor. So it's like, how is there a senior director and a director of ops? Well, they got to pick their titles, was how that went down. So, but there was no clarity on who's doing what. And it just evolves that way when you just don't know what you don't know. So that's why I highly recommend reading Traction by Gino Wickman. I run my company on EOS, the Entrepreneurial Operating System. That will give clarity on how to set this up because it doesn't seem like rocket science once you're doing it, but it actually takes a long time to set up and it's very methodical and thought out to set your company up for success.
Cool. So let me ask you this. If there was one success tip, I've got a financial professional listening today and they're like, I've never thought about any of this before. I've been a one-man band my whole life. And now I understand why I can't scale beyond where I am right now. If there was one success tip that you would give them to say, start here, do this first, and here's what you're going to get as a result of that, what would that be?
I would say if you're hiring your first person or you're hiring someone in your back office, I always think about who, not how. Who can help me get there, not how am I going to get there? So know your resources. Know that you can send your folks to training. You have resources with the admin effect. That's where I would start. And then I'd go on to talk through the consulting side of it to make sure that I'm setting up my business for success from the structural standpoint. Or if you hire a director of operations that's going to help you, or a chief operating officer is going to help build that out, you can send them our way as well, and we'll help them structure that. But don't feel like you have to do it yourself, because that may take away from the sales you're doing. You can always outsource.
Yeah, the Pareto principle comes into play here, because if you can spend 80% of your day in the 20% of what you're best at doing and get other people that can do the 80% of things you're not as good as doing and let them own that role, now you've got an opportunity to be more successful than you would be otherwise. I think that's huge.
Exactly.
Yeah. I think that's huge. Well, Katelyn, if somebody wants to learn more about the admin effect and they want to learn more about who you guys are, what you do, and the amazing team of folks that you've got working there, how do they do that?
Well, I'd say you can start by going to our website at www.theadmineffect.com, and you can book a call right there through our website. It's our Connect call, or you can reach out on LinkedIn. But I'd say that's the best place to go, is to go to our website and get your Connect call booked with my team.
Perfect. So if there's something you wanted to share on the podcast today that I didn't ask that you can leave our audience with today, what would that one thing be?
You're not alone. It is its own beast when you're building out a business. So when you go from a solopreneur, how did you say it? A solopreneur?
Solopreneur.
I
Yeah.
like that.
Yeah.
To building out a team, that's a very different ball game. So know that you don't have to do it on your own. You have resources just like the admin effect out there, and we can guide you through that, because it is a lot when you're building out the infrastructure of a business to scale.
Absolutely. Well, Katelyn, I want to say thank you for your time. I mean, this episode could go for another 45 minutes or an hour. There's a lot we could really dig into here, and there's a wealth of knowledge inside that head of yours that I'd love to begin to pull more out of, and hopefully we can have you come back for another episode in the future. But I want to say thank you for being a part of our podcast today. And on behalf of all of us here at Legacy, I'm Dr. John Terry. I want to say thank you for joining us today. We look forward to having you on our next installment. Thank you for joining us, and have a great day. Hey, it's Dr. John Terry with Legacy Marketing Group, and welcome into Tune Into Sales. I am super excited today because one of my heroes, one of the people I've looked up to for a long, long time, because she knows more than anybody else in the world about annuities, and that's Miss Sheryl Moore. And we are so excited to have her in the room today, and we're going to talk about all things annuity. So, Miss Sheryl, the rock star of the annuity world, welcome to Tune Into Sales.
Wow. I got to tell you, John, my head's so big, I won't fit through the door when I'm done here. Thank you.
We are so excited to have you, because, and I've had a lot of people asking, when can we get Sheryl on a podcast? And I'm glad we were able to make that happen, and thank you for being available. So let's jump right in and let's get started. Sheryl, if we look at the world around us in terms of what's going on right now in the annuity space, there are more annuity products available today than probably ever before. As we're looking at the state of annuities today, where would you say that we're seeing the most growth? Where are we seeing areas of retrenchment? And what do you think this declining interest rate environment that we now appear to be in is really going to shape the world of annuities going forward?
Okay, well, I'm a person who deals well with small chunks at a time, John, so hopefully I'll capture everything you asked there. I'm really excited about the state of annuities right now. And, most of your fans probably know I'm a huge advocate for annuities, but indexed annuities are a product that I have a personal experience with, and they're near and dear to my heart because of that experience. And although I will say that structured annuities, or RILAs, are actually doing better than indexed annuities, I'm really excited to see what's going on, because, last year we had 130 billion of indexed annuity sales. I still remember when we were doing like 7 million a year in indexed annuity sales. So I'm really excited about that. And I'm seeing some innovation that I haven't seen since probably just after the turn of the century. So we've seen like best entry point features where you look at the lowest point in the index over the first, say, 90 days and use that lowest point for your index measurement. We're seeing a ton of companies that are offering indexed annuities that guarantee their rates for the surrender charge period, which is huge, huge for us. And then I'm also seeing some new indexing methods are being created. I mean, some really interesting innovation ones, which is, something we normally see whenever there's a low interest rate environment. Interest rates right now are better than they have been. After 2008, 2009, they were miserable. I still remember 3% index annuity caps, and we're certainly not there. But I'm seeing new indexing methods the way I used to during that period. So I would say this is a wonderful time for innovation and the renaissance of indexed annuities in particular.
So we're seeing record sales in the annuity space. What do you think is driving that? Is it the boomers that they're really settling into? Because we're getting close to the end of all the boomers getting past age 65. Do you think that's a driving force, or what's really the impetus behind this incredible growth we've seen over the last few years in the annuity space in particular, and fixed indexed annuities in general?
So as you alluded, I think the silver tsunami, as they're calling it, does account for a little bit of the increase that we're seeing in sales. But something I would attribute the growth in annuity sales to be is something that not a lot of people think about, and that's the Secure Act, which was legislation that basically made it so you can have annuities within 401ks. Now, how does that relate to individual retail annuity sales? Well, as you know, one of the things I do is serve as a fact checker for the media whenever they're reporting on life insurance and annuities. And what I've seen is that I've gone from correcting negative and inaccurate media a couple of times a day to actually promoting positive articles about annuities. And I got to tell you, John, this is really the first time I've seen this in my 26-year history in this market. Positive press about annuities gets in front of consumers' eyes, and then they say, hey, valued insurance agent, I read something about annuities that sounded pretty positive, and I was thinking, based on what they said, that might be right for me. Let's talk about annuities. Although I will say most consumers don't know what an annuity is, and there's still a little bad taste in people's mouth when you mention the A word sometimes. But our industry has done a lot of research on these products and how consumer behavior works in relation to annuities. And we found that if you talk about what an annuity does rather than what it is, then you get an initial positive response as opposed to the consumer tuning out because they hear the A word. So that's really helping too.
Gotcha. So next question I've got along those lines, and I want to go back in time just a little bit. For those that maybe are new to the annuity world and they're going, who's this Sheryl Moore lady? And why is John goading all over this amazing lady that has all this knowledge? Can you give us just kind of a little backstory of how you got to where you are today, just for those that may not know who you are?
Yeah, you bet. So 26 years ago, I was working for an insurance company who was the number one seller of indexed life insurance and indexed annuities. And I was actually in charge of competitive intelligence for the company. There was a lot of politics there. We really were focused on life insurance products primarily because they were looking to ramp up sales and sell the company off. Coincidentally, that company is now the number one seller of annuities in the nation as a point of reference. But I had a personal experience when I lost money in a 401k. And I honestly had no idea that you could lose money in a 401k. And when I complained to my boss about it, I was like, I don't know what to do. I'm losing money and it's going down every day, my 401k balance. What can I do? And he said, well, why didn't you buy an indexed annuity? And I was like, what's an indexed annuity? Because of all those politics and my experience in the life insurance world, it was foreign to me. And when he explained that it was a product where I could never lose money as a result of the market's movement and be guaranteed 0% interest at the worst case scenario, but earn interest based on the performance of the stock market that was limited to a degree, That sounded like something that was perfect for me, John. And really, what ignited the fire in me to start my own business was that I did research at the library on this new thing called the internet. And most of what I read about annuities was very negative and inaccurate. So I thought, what if this was happening to my grandparents? What if they were looking for information on annuities? They actually bought variable annuities when indexed annuities were more in line with their risk profile. And that in itself really motivated me to make sure that consumers know how these products work and what they're like so they can make a decision on whether or not they're right for them. I don't care if you decide that an annuity is not right for you. You just need that information so that you can make that determination on your own. So that's really my motivation for doing what I do. And today I run a market research firm that specializes in life insurance and annuity products. We track the sales of the products. We have a massive website database that houses all the product information and rates for these annuities. And as I mentioned, I still do fact checking for the media. My hands are in legislation and regulation. There's so much that I do. But I'll tell you, my grandparents like to tell people I'm the CEO of an insurance company. And I let them think that, John. Technically, they're not wrong.
You never know how grandparents are. My dad asked me to this day, and I've been doing the same thing for almost 4 decades. And he's like, "Tell me what you do," and and I laugh at that because we have the same conversation quite a bit right now going on because his dad's getting older, his memory's fading. But yeah, I mean, in my dad's eyes, I've done a lot of different things. I haven't been called the CEO of an insurance company yet, but who knows? Maybe that's coming down the road.
Well, sign me up. I want to be the first one to get you started with your market research when you start that job, John.
Awesome. Cheryl, that's a deal. Absolutely. So Cheryl, I want to pivot back to thinking back to the early days of fixed indexed annuities. I remember when I got started, we had this company called Keyport and came out with this amazing fixed indexed annuity that kind of started the trend. And as we've looked over the years, the way fixed index annuities have been built have gotten much more complicated in terms of the indexing strategies and things we're putting in. Do you think that's been a positive thing? Do you think that's been a negative? If you were to rub a crystal ball and say, where are we going in terms of product design so that we're meeting the needs of consumers going forward? What does that look like to you?
Well, one of the things that people compliment me for, John, is that I give it to people straight.
Yes, you do.
So I'm going to tell you, I'm not a huge fan of all of the innovation that we've seen in the market in terms of product, in terms of indexing methods. I mean, I've got over 210 different indexes that you can earn indexed interest off of on an indexed annuity. And I think when you have that many choices, it's a little overwhelming, not just for the consumer, but for the agent who's selling the product. I mean, I can still remember when indexed annuities had an average of 6 different index choices on them. And today, a lot of companies have over 30 different allocation options available to the client. And that just makes me feel like we're forgetting the keep it simple, silly KISS acronym. We need to remember that these are products that consumers have never heard of. They likely have never heard of the insurance company that's offering it. So this whole concept of indexing is very foreign. And I think we're complicating the story a little bit. But, I am hopeful for the index annuity market just because we have companies that have historically said, our distribution will never have an index annuity available for them to sell because we're a captive agency company and we don't believe in index annuities because they're an independent agent product. Well, those companies are now eating their words and offering indexed annuities. So we have a lot of really big companies who historically have kind of poo-pooed these products. And today it's like, welcome to my house, guys.
Right. Yeah.
They're offering indexed annuities. Yeah. So, a lot of not so good, I'd say, but we're making 2 steps forward, 1 step back. So we're going to get ahead eventually. I just think and hope that the insurance companies should take a look at the state of index annuities and help us reevaluate if we're really doing the agent and the client a service.
Sure. Well, what do you think about different distribution channels? I mean, we see fixed index annuities sold a lot in the independent channel. We're now seeing that some, as you mentioned, in the more captive channels. What do you see going on in the banks, in the broker-dealer world, and in the investment advisory world when it relates to annuity products today, variables included?
Really, historically, this has been an independent agent's product. In fact, more than 80% of all sales historically have originated through independent insurance agents. That's why a lot of people say index annuities are independent agents' bread and butter. But I have seen since the Dodd-Frank finance reform bill, which was in July of 2010 that it got passed, that there are distributions that are embracing index annuities in a way that they didn't feel was a possibility before, just because we were able to secure the fixed insurance status of these products with the Harkin Amendment that was on that bill. And so what we've seen is organizations like banks and broker dealers and investment advisory firms that historically would have said, I don't know how those are going to be regulated. That makes me concerned, so I'm not going to sell those products. And today, I would say all distribution channels are distributing index annuities, except really direct to consumer. We do have a couple of companies that participate in that distribution, but their sales are so nominal, it doesn't really contribute a great share of the product sales. But I've been encouraged just because those new distributions mean new opportunities to get in front of consumers and say, hey, is this a product that might fit for your risk profile?
Absolutely. Yeah. Sheryl, and as I look at where we're going, we're seeing declining interest rates, but we're seeing the market continue to soar. What do you think the prognostications are for 2026 as agents are looking forward to, they've got clients that maybe have been in a MIGA that's getting ready to renew. Interest rates aren't going to be where they are. We're now seeing, as you mentioned, those strong contractual guarantees that are available in many annuities, and we have some here at Legacy that will offer, guaranteed rates and caps for the entire surrender period. Where do you see the market shifting or moving in this current economic climate and political climate we're in going into 2026?
Well, I really think that multi-year guaranteed annuities, their sales are going to be down because rates are down, but those sales have to go somewhere. And so, given that CDs are the primary product that multi-year guaranteed annuities compete against, I would say that MIGA sales will still be relatively good because CD rates are so crummy. But indexed annuity sales are going to be even better just because of what you mentioned, John. I mean, it's hard to make the value proposition for an indexed annuity when you have a MIGA rate that's guaranteed for 6% for 5 years. But when you start dropping down and you're getting into 5% interest rates, 4.5%, then people are saying, well, would an indexed annuity possibly be a better option here? Or even, can I split the case and do part MIGA, part indexed annuity? And I think that that's really going to help the products to accelerate their sales in a way that hasn't happened for a couple of years. They've been sitting pretty close to the same level of sales for a couple of years here. I do still think structured annuity sales are going to do even better, or those RILA products, just because I do speak with a lot of insurance agents who say, I sold my first RILA and I just can't see going back to indexed annuities because these products offer so much more upside potential, although they do have limited downside potential. I'll say I'm not a fan of that narrative just because I think the risk profile of somebody who purchases an indexed annuity is so very different from that says, hey, I'm willing to take some losses for the offset of having a little bit more than an index product. But I'm hearing a lot of agents say that. So I think structured or RILA annuities are going to keep doing very well relative to all other types of annuities. But index annuities will benefit from the lower interest rates because, quite frankly, the two things that affect index annuity sales the most are CD/MIGA rates and the market's performance. And the market's headed up. So that speaks really well for indexed annuities.
So, Sheryl, another innovation we've seen in terms of indexing has been intraday trading. And we've seen that technology come in really in the last few years that we didn't have years ago when like the S&P and some of the other bellwether indexes were formed. How's that been a game changer?
Well, I'm seeing a lot more of those indexes being introduced, John. And I think it's just a bandwagon thing where everybody wants to get on board. but they're so new that it's difficult to tell where the allocations are going on those. Although we do ask for sales at an allocation level or index level on index annuities. It's just that they're too new to see what level of sales are going to those indexes. But I welcome the innovation. I will say that there is over 200 plus indexes available in this market. So it makes me wonder, how much of that story is being told to agents and therefore consumers? So what do they know about those choices that is different from other choices?
Yeah. And that's one of the big questions I'm asked when I go out all the time is, John, there's so many indexes available. How do I know which index to sell to my client? And how do I
Mhm.
know which one aligns with their goals, their needs, and their objectives? And helping them understand the different ones that we simply have here at Legacy, not to mention what are offered through all the other carriers, that's almost a full-time job. So at some point, the
Yes.
agent's got to lean in and say, these are the indexes I want to learn and I want to get familiar with. I can't learn them all. And
Mhm.
so leaning into that so I can be an expert in certain areas that I can intelligently speak to my client is
Mhm.
important. Would you agree with that?
Yeah, I mean, really, my advice to agents has always been stick with what you're comfortable with because you want to have confidence going into the presentation. And if you don't understand an index, then your client's certainly not going to understand it. Stick with what you know is my advice. But what's amazing is that this market has almost 700 different indexed annuities from which to choose if you're an insurance agent who's selling these products. And I think that if you looked at all the different combinations of this type of indexing method, this type of index, this way of limiting the index, there's got to be hundreds of thousands of combinations there, John. It's become highly commoditized to a degree on a product that you would think can't be commoditized.
Absolutely. So I want to back up to a comment you made a little bit ago about interest rates falling, MIGA rates, and as a result are going to fall. You think we're going to see some of that MIGA money move into the fixed index annuity space because it's a good story. For the
Mhm.
agent that's been selling MIGAs that maybe has never sold a fixed indexed annuity, if you could give them a little piece of guidance and advice, and here's how to help transition that client to understand how fixed indexed annuities can provide them an opportunity for growth without the downside risk, what would that
Mhm.
guidance be to the MIGA producer?
It would be do not get overwhelmed by all the choices on these products, whether it's which insurance company you're doing business with or which product you're talking about or even which index. That's really overwhelming to somebody who's just sold MIGAs because MIGAs are so simplistic. Really, what these agents need to know is that regardless of which index you choose, regardless of the indexing method or the way of limiting the index interest, over a long time, they should all perform about the same. And so focus on what you know. And if that means annual point to point on the S&P 500 with a cap, that's where you start, but you build off of that. And the other thing I would suggest, and you might not have heard this 10 years ago, but get involved in social media because there are so many groups on LinkedIn and Facebook where you can learn from other insurance agents who are knowledgeable and experienced with these products. It's a great place to learn, John.
Yeah, absolutely. And we have an honors program for independent producers here at Legacy, and we offer learning forums and an opportunity to go in
Mhm.
depth and do peer to peer training. And that's one of the nice perks that we offer producers that want to come to work with us. Not only the fact that we've got multiple carriers under, one umbrella and really a carrier group that we bring to the table, that ability to educate the consumer is really an area that we want to stand out and be an innovator and be a leader in helping provide that education for the agent as well as the consumer to helping them understand there are choices they have to make. Let's make educated choices along the way. And speaking of educated choices, you wrote a book a while back, which I had an opportunity to read, and I can't wait to see you in person again so I can have you sign that book. But tell me about the book itself and what that's done for you and maybe advisors that would like to have a book like that. What was the impetus behind the book?
Why I Bought Indexed Annuities is the name of my most recent book. And what really prompted me to write it was that I thought, insurance agents that are talking about these products have sometimes questionable credibility. I'm not saying that they aren't credible. I'm saying people are questioning their credibility because they earn a commission or other things like that. It would be perceived as a conflict of interest sometimes for these agents to give advice on index annuities because people say, oh, well, they earn a commission. So, I can't really trust what they're saying. That was kind of part of the reason I really had ignited a feeling in me that I needed to do a book like this so that agents could put this book in their clients' hands and say, you know what? This lady does not make money based on the sales of these products. She doesn't endorse any company or product, but she bought an indexed annuity like we're talking about for you. And I'd really like you to just read her story. It'll help you understand these products and how they fit into a financial plan. The book is such an easy read, John.
It is.
I wanted to make it funny and relatable because it's a very analytical mind that I have. And I wanted to engage people before I throw them all the facts about annuities, which are, relatively complicated for some consumers. And the other thing that really put a fire under my tail to finally write the book was I had so many people in the media who would say, yeah, but these products have a minimum of 0%. Who knows how they've really performed? Well, I could say, hey, my index annuities have averaged 7%, but they'd say, oh, but you're an annuity cheerleader. So, that sounds good, but where's the proof? Well, at the end of the book, I've put policyholder annual statements where you can see people who've earned 10%, 20%, 30 and 40%. Now, I go in to explain this is not a reasonable expectation for gains on index annuities, but to the naysayers, they do perform. And so that was really a project that took me 20 years to do just because I needed all of those contract holders' annual statements. But I love the book. I think that I'm getting a lot more agents who are putting in bulk orders, which is encouraging to me because that just means more consumers are learning about these products.
Well, it was a conversational read for a lofty topic. I enjoyed reading it. Your humor and what you brought in terms of just entertainment into the chapters of the book were just fantastic. And when I finished it, my middle daughter has expressed some interest in the financial services industry. And I said, this is a book you've got to read. And so that book is currently in transit to her to give her an opportunity to learn from an expert about fixed index annuities and really introduce her to a world that at this point she doesn't know. And so, yeah, I would encourage financial professionals, if they're looking for a great third-party resource, that book that you put out is just absolutely phenomenal. So thank you for doing that.
Well, thank you, John. I just wanted the opportunity to legitimize people who offer indexed annuities because the media just doesn't get it right when it comes to these products, nor the people selling them.
Absolutely. So I want to pivot, Sheryl, for just a minute because we're right in the middle of $124 trillion of wealth moving generationally. We've seen that from the Sorelli study. It started in the 62, then it went to 84, and the new number is now 124 plus that's in the process of moving. How much of that do you see is annuity business that's going to be generationally moving? And what's the advice to producers that have sold an annuity to mom and dad to make sure they've got an opportunity to work with the next generation? What are they missing?
I think that what I get hung up on is the fact that the greatest fear of Americans is running out of money in retirement, John. That's a statistic that has been the number one fear for a great many years. And an annuity is the only financial services product that is strategically positioned to help with that because they guarantee a paycheck for the rest of your life. Even if you live to be 150 years old, these products will continue to send a paycheck every month. And I think that that's something that we don't talk enough about, particularly in the independent agent distribution, just because so many insurance companies feel like, hey, not my responsibility to advertise annuities on TV or not my responsibility to advertise these products in magazines. They leave it up to the field marketing organization and the insurance agent to do that marketing or education on these products. I haven't really seen a lot of people capitalizing on that statistic about the number one fear of Americans. I mean, it's a greater fear than death or public speaking, which
Yeah.
is just ludicrous to me. But if we could tell that story and talk about those statistics, then I think more people would be open to this idea of annuities and what they can do for them.
Oh, absolutely. Yeah, I saw a stat on Plan Advisor the other day, and they were interviewing employees not yet retired. And they said if
Hmm.
there's one thing we could do and offer in the retirement products that are being offered by employers, what is that one thing that we could offer? And 90 something percent of them say, I'd love an investment opportunity that allows me to have a guaranteed paycheck when I quit working, that I know every single month I'm going to get a check for the rest of my life. So
Hmm.
I think as an industry, we've not done a good enough job in educating the public on what these financial instruments actually do and
Hmm.
the value and benefit that they bring to consumers.
Well, I think consumers don't know, hey, Social Security, that's an annuity.
Mhm,
The Publishers Clearinghouse, your prize is an annuity.
mhm,
This is like a personal pension that you create for yourself.
mhm.
And I think if we could bring those things up, it would lessen the trepidation about a product that is not understood and not talked about enough. I think a great deal of that trillions of dollars is going to go to annuities. I don't think as much that should be going to annuities will, but I think as we talk about decumulation or taking that big pot of money that people have and turning it into a series of payments, I do think that annuities are going to become a more logical choice just because consumers are going to be hearing about them more, John.
Absolutely. So, Cheryl, one last question, and then I want to get ready to move us to a close. As we look forward into 2026, 2027, moving for the next 2 to 3 years, when it comes to annuities in particular, what do you believe is the most overlooked opportunity that financial professionals are walking past every single day that would serve the consumers and the American public better by having an annuity conversation they're not having?
I think I'm going to again go back to, two things. Number one, the guaranteed paycheck for life story. And then number two, your clients may not have heard about annuities, but they're interested in a paycheck for life.
Mhm.
So again, talk about what they do instead of what they are. You still at some point are going to say, well, hey, did you know, that product we've been talking about that gives you a paycheck every month is actually called an annuity.
Mhm.
And I think that if we position these products in that manner and talk about that greatest value proposition, which is the guaranteed paycheck for life, that we're going to get many more people into these products where they do fit their risk profile and their needs, goals, and objectives for their retirement. And so that's really exciting to me because I had a 401k and lost money. And what I wish I would have bought was an annuity. So I don't want more people to end up like me or my grandparents. And I
Right.
think that, the more insurance agents that hear about these products and the more clients that hear about these products mean sales are going to keep increasing and more people are going to be able to sleep soundly at night, John.
Absolutely. I love what you said. It's about the benefits and not the features. We see
Hmm.
financial agents all the time want to talk about the features of an annuity. Well,
Hmm.
until the client knows what that annuity actually does for them and says, yes, this is what I want, they don't care about the features. They
Hmm.
want to know,
Hmm.
can I sleep soundly at night knowing I'm going to have a guaranteed paycheck, knowing I'm never going to lose another dime if the market goes south? Having
Hmm.
that confidence that they're able to move into a financial instrument that offers that, that's a big thing. And
Hmm.
when they say yes to the benefits, they said yes to the annuity before they ever even know it's an annuity they're looking at. And that's a powerful area that's often overlooked.
Well, I'll tell you, John, I'm kind of a nerd. I'm a big time data nerd, super big annuity nerd. But sometimes I go into like farmers markets and gatherings and public spaces.
Mhm.
And when people ask what I do, I'll say, well, I have a question first. If I could tell you about a financial services instrument that would guarantee you a paycheck every month for the rest of your life, no matter if you live to be 150 years old or older, and it promised that you would never receive less than 0% interest, but you'd earn interest based on the stock market's performance that's limited to a degree. Is that something that would interest you? And never in 21 years has somebody said no, John.
Absolutely.
Everybody's wanted to hear more about it. So I feel confident that the more agents we have feeling comfortable with these products, that means more consumers who are going to be served the products that they're looking for as solutions.
Absolutely. Well, Sheryl, that is a great place to wrap up our time today. So let me ask one final question. For folks that want to know how to find all things Sheryl Moore related, what's the best way for them to seek you out, to get information, and to begin to learn from the incredible wisdom of the rock star of annuities?
Well, I'm going to complicate things a little, John, even though I talked about uncomplicating things. I have two websites that would be great for them.
Very good.
Winkintel.com. That's wink, like I'm winking. Intel, short for intelligence.com. That's my market research firm. But if they want to learn more about Sheryl and even maybe buy a book, you can hit SherylJMoore.com. And that's Sheryl with an S, middle initial J, Moore. And you can Google, because after 26 years of doing this, I have quite a bit of hits.
Well, Sheryl, is there anything you want to add as we wrap up that we didn't talk about, or any parting words of wisdom you'd love to lead with our audience today?
We've talked about everything that's on my mind, John. I just want to thank you and Linda and Preston and the whole crew at Legacy Marketing Group for everything that you all do in order to get people familiar with these products, more comfortable, and talking with their clients about them. So thank you very much.
Well, Sheryl, thank you so much for being my guest today. It is a pleasure to have you virtually in the room, and I can't wait to have an opportunity to see you in person, give you a big hug. And if I can get my book back from my daughter, I got to get it signed from you so I can have a signed copy from the rock star. Oh, by the way, how's the dog? I know you got a new dog, and did you get the dog all blinged out? I got to ask that before we go.
Yes. So Pickle Pants is now almost 3.5 years old.
Yes.
She does have a sequin dog outfit, and she is growing like crazy. Although she remains at 7.5 pounds, she's learning and soaking up information. So right now we're working on getting her not to jump up at people, which is our biggest challenge. But she's doing great. Thanks for asking.
Very good. Yeah, I see her on Facebook periodically, and great to see that she's doing well. Well, Sheryl, again, thank you for your time. Ladies and gentlemen, for those of you that have joined us for the podcast today, thanks for being here for this episode of Tune Into Sales. I'm Dr. John Terry. For more information on all that we offer here at Legacy Marketing Group, you can visit us at legacynet.com, or you can give us a call at 800-395-1053. Press 1 at the voice prompt. You'll be connected directly to our sales team. And on behalf of all of us here at Legacy, thanks for joining me. Have a great day. The opinions expressed on this podcast do not necessarily reflect the views of Legacy Marketing Group. This podcast is for informational purposes only and should not be construed as offering tax, legal, or investment advice. The guest featured on this episode is not affiliated with Legacy Marketing Group in any capacity. Legacy makes no representations or warranties regarding the guest's products, services, or claims. Hey, it's Dr. John Terry, and welcome to Tune Into Sales. It is 2026, and we are looking forward to another year bringing you incredible content as we have an opportunity to help you tune into sales ideas, sales techniques, sales strategies, and meet individuals that are leading in this industry, and today is no exception. Very, very excited to have one of the newest entrants into the Legacy family, Miss Marti McLeish, who brings a stellar background and a stellar history of working in the financial services industry and is leading as our national sales leader. So, Marti, welcome to the episode. I'm glad you're with us today. Can you start by giving those that don't necessarily know your story, maybe a little bit of your backstory of what brought you to Legacy and the experience that you bring as, the incredible person that you are to the role that you're serving in?
Yeah, absolutely. Thanks for having me, John. So I started in the independent space about 23 years ago. And I started on the wholesale side. And I spent my first 13, 14 years in that side of the business. And one of the things I learned and realized early on was I did not have that depth of experience that the advisors and agents I was working with had. And so in order to kind of help them with ideas and business building tools and things like that, I just didn't feel like I was effective enough. And so I decided to make the change and leave the wholesale side and go over to the retail side. And so I did move over to working for a couple different independent advisors. running offices, setting appointments, then moving into really building my own book and, holding seminars and different things like that. I did a little brief stint, as I like to call it, over at Mass Mutual, which is completely different than our side of the business. And again, it was just another one of those building blocks that I really didn't realize that I needed to fully understand the world that I'm serving. And from there, really opened my eyes to what advisors really need and the support that they are really missing in this industry. And that's that kind of growth and strategy content. As you know, John, a lot of advisors and independent agents get into this business not because they want to run their own business, right? They get into it because they want to help people. They want that, they grew up in the finance area and they want to, support in financial services, but not necessarily knowing how to or even willing to run an effective business. Mm-hmm. And to be really successful in this industry, you have to be able to do that. So I moved over and took all of that, knowledge, that 20 years of knowledge and learning and experience to my own organization, where I was supporting firms and helping them build their growth and strategy. So really building out the systems and processes, the structure, helping them, really allowing those advisors to just get back to doing what they did best, right? And that's just focusing on the clients and focusing on, the financial side of things. And then by happenstance, I ran into our good friend Dominic Curcio at an event, and we just started chatting about some opportunities that he thought were available within Legacy. I kind of shared where I was and what I was doing, and it just made sense. And the rest is history.
Well, Marti, we are glad to have you on board. And, it's exciting for a woman-owned company to have a female in the role that you're in, leading as a national sales director, which really leads into the conversation I want to have today, and that's about women in the financial services industry. And Marti, for my first question I want to pose to you in that regard, why do we see women entering the financial services industry in what I would say increasingly growing numbers? For many, many years, it was a male-dominated industry, but now every time I turn around, I'm seeing more and more women, and some incredibly smart, effective women stepping into the ranks of insurance, investments, managed money, banking. Why are we seeing this happen in the marketplace?
Yeah, so great question. I mean, the short answer is social media and marketing. The need has always been there for women in this industry. That hasn't changed. But what's changed is the way that we're able to communicate that. And get that out to women and let them know this is the type of industry we are. These are the things that we stand for, and this is why it would be attractive for you as a woman. Again, the need has always been there, but the way we communicate it, the way we position the roles in this industry, unfortunately, the narrative has always been, it's, and don't get me wrong, it is a grind, and it is a nonstop, but it's a very flexible, especially on the advisor side. Can be a very flexible occupation, and I think that was kind of the disconnect that women had with this industry in particular. And so through better marketing and communication and things like social media, we've been able to really communicate that to women.
Yeah. Well, and I think looking at what's going on right now in the world around us, we're in the middle of this $124 trillion generational wealth transfer. And the bulk of that money initially is going to be going predominantly to women who are outliving their male counterparts by an average of 5 to 7 years. And so I think women having the opportunity to speak to a woman that has lived a similar life to what they've done and can relate to their experiences, I think is valuable. And I think that's one of the tools that makes women very, very effective when it comes to retirement income planning in particular. But Marti, I'm sure there's probably some other areas along those lines where women in the retirement space really stand out. Any thoughts there?
Yeah, absolutely. So yes, the opportunity to work with women in this industry. So we've got two women issues, if you will, or opportunities, if you will. And the first is that there is a definite need for women in this industry, and as you said, it's starting to build, and we're starting to get more women in the profession. But also, there's this opportunity to work with women who will be inheriting all of this wealth over the next handful of years. And that really applies to both men and women in the profession, right? So it's an opportunity for all of us to be able to learn how to best support these women that are inheriting this money, learn how to best speak to them, how to have the conversation around inheriting this type of wealth, around education. And because, as you know, that's the biggest difference when it comes to working with men and working with women. Not that men don't want to be educated, but there is a deep desire and need for a woman to understand something fully before she adopts it or purchases it or whatever the case may be. It's if somebody's doing it for you, it's really easy to say, well, I don't really need to learn that. But again, going back to the way we're communicating things, the role that marketing and social media is playing within the industry has really gotten that message out, at least trying to get that message out to women about what importance there is around understanding money, understanding your money specifically, where things are, passwords, accounts, what money you can pull from, what money you can't, all of that stuff, high level. And it's not to say that women need to be experts or even should want to be an expert around it, but they just have to be knowledgeable more so than they did in the past.
Yeah, no, I agree with that. An informed decision is always a better decision. And the more women can be informed about the financial decisions they have to make, I think the better those decisions come. But
Yeah.
but Marti, we've seen tremendous opportunities open up for women. But with every opportunity that opens up, there's also a challenge that shows up. As we look at women in the financial services industry today, what do you see as the major challenges as women look at maybe entering this industry or growing into this industry? And what do you think the challenges are, and how do they overcome them?
One of the biggest challenges, and I don't speak, I'm not speaking for myself. I'm speaking in this scenario. I've been in the industry for 23 years, as I said. I haven't run into this to be a problem for myself, but just in many of the financial groups that I'm in with other women. I mean, it's just a fact. You walk into a room and you're going to be one of maybe a couple women in a room within an organization. And so for some women, that can pose a little bit of a issue, right? It just feels a little bit uncomfortable, whatever the case may be. But as far as other challenges go, there is the challenge that we as an industry tend to pull women into service roles. And right off the bat, we don't consider them for quote unquote sales roles. We don't consider them for advisor roles. We are looking now, a lot of that's changing. For sure. Again, going back to just the way we're communicating it and seeing the opportunities, there's been a shift to some extent. But for the most part, when you go into these organizations, you go into the carriers, you go into the IMOs, you go into any of the large, RIAs. In the operations and the service side, it's you're going to see typically more women. So kind of shifting that and changing that mindset, even for women going into a financial services organization, to be able to think, hey, maybe there's some other opportunities here for me. Maybe there's some other things I can do. Maybe I don't have to have, any formal sales training to be able to be successful in this industry. There's a real opportunity there.
You talk about women being in these service roles and maybe them not seeing the opportunity or not realizing they can step into the opportunity. You think there's a belief issue there with some of the women that they've seen other women working in service roles and they say I can be comfortable there. Does it take something more for a woman, just like it does for a man, to be able to say I can say more, I can do more, I can become more, and getting them willing to step into that uncomfortable place that they're going to step into a sales role or step into a starting an agency or starting an RIA firm? What's the big holdback there?
I think that there is this, well, let me back up. To your point, there is no difference for a man to walk into this role as there is for a woman to walk into that role.
Yeah, agreed.
But I do think that there can be some sort of a view as a woman from a risk-taking standpoint. And it depends. Every household's different. Maybe there's the woman we're talking about is married and has a couple kids, and her job is the safe job, right? Her career, and so from that standpoint, it can be daunting if you are going into a sales role that within our industry, there's a good chance it's commission based. Some, if not all, for as far as the role is concerned. So that can be a concern, I think, for women. I think I don't think it's a capability concern, but I do think it's an optics concern for some women. If you come into an organization and you see, you look on a website and all the advisors are male and all the service folks are female. I take that as let me in. That sounds great. Sign me up. To me, I kind of thrive on that kind of stuff. Like, let me break through. Let me see what I can do in this area. Let me prove anybody wrong. Right. But from another standpoint, it can be daunting to see that. So I don't think that there's a capability, a talent, any lack on the side of women as it relates to those roles. But I do think that there's just you just got to do it.
Do you think that the industry is doing enough to attract more women into sales positions where they're having an opportunity to be more of an advisor, more of a guide, rather than the customer service roles that we've seen in the past? Do you think the industry could be doing more to attract more females into the marketplace?
Listen, this is a tough topic for me because I think that they want to. I think that they're trying, and they think that they are, meaning the industry. Mm-hmm. But I don't think that they're necessarily going about it the right way. I think that what we need to do is position these roles as roles that are available for anybody to take, instead of saying, we're tired of the way things used to be. We want things now to be this. It doesn't have to be so cut and dry, I don't think. I think that there can be communication from our industry of, let's talk about the things that are important to women. Mm-hmm. Let's talk about the things that are important to just some women. It's not all cut and dry. It's not every woman doesn't plan on having a family and raising a bunch of kids, and they're concerned about the time that they have to spend on this career, or the time they're away from home. But also there are some women that do, right? So we need to look at this through a broader lens, I think, rather than just honing in saying, this is a super flexible career. You can make tons of money. It's very rewarding. You get to help people. Let's really kind of like dive down into these different areas and what it looks like to be an advisor. I think the best way to learn for somebody is to go into that junior advisor type position. I think more firms need to do that, need to bring on folks in a junior advisor, junior agent, whatever, depending on the situation. So it's like on the job training. So you really get a feel for this is what it's like working with the clients. I know personally, I loved everything about the retail side except for the planning. I loved the people. I loved the education part of it. Um, the conversations that I got to have in the industry learning. But when it came down to creating a plan for somebody, I didn't love that. But that's what my position allowed me to do, was just really get a feel for where is my best fit within this organization.
Do you think the industry could be doing more in intern roles and agencies and organizations that want to get more women involved in this industry and in their agencies and in their firms and in their organizations? Do you think more of these intern type roles or introductory roles or junior partner roles, do you think that would be beneficial in helping expand the opportunity for more women?
Yeah, I mean, I think it expands. Different topic probably for a different day, but I think bringing on a junior producer, junior advisor is just it's gonna help you with your own firm, from an expansion and a growth, and on an entry level to where you're not making a full commitment to somebody that's been in the industry for years and you're trying to get them to do things the way your office does things. And so I do think that there's just a huge opportunity for junior advisors. And then from uh, there's been a lot of talk regarding how young producers are brought into this business these days. There's been a lot in the past few weeks, and I've seen it firsthand. And that junior advisor role really gives, or junior producer, whatever the case may be, really gives somebody new to the industry just such a broad look at everything to really get a feel for, like, maybe somebody is brought in as a junior advisor and they just realize, man, I love putting together the plans. I mean, that's just what I want to do. I just want to, I want to be in that kind of role. Or maybe I just love educating people. I want to be in front of people, and so I've always had that conversation with folks that have worked with me in the past, either new to the industry or younger folks, when they're like, this just isn't for me. I'm like, this particular role might not just be for you, but I'm telling you, like, look around. This is such a large industry. There's so many different opportunities here. And it's a great industry to be in. So yeah, I definitely think on both sides, that junior advisor role can be key.
Oh, absolutely. Yeah. And money makes the world go round. We've heard that old saying for years, and understanding how money works and being able to take that experience and share that with someone else so they can make better informed money decisions that lead to better outcomes 10, 15, 20 years down the road, or even leaving a legacy to their kids or their grandkids. All that's valuable. And the opportunity to learn, I think, is tremendous. Now I've been in this industry for a long, long time. And I've had an opportunity to work with a number of successful men and a number of successful women. And one of the things my dad taught me early on was the fact that, John, you can learn from anybody at any stage in life if you're open and willing to learn. Now, as I say that, it's also appropriate that the people that are ahead of you on the journey be willing to share their knowledge, their wisdom, and their expertise. Because if they don't do that, that knowledge and wisdom and expertise passes on when they pass on. So thinking about the successful women that are in our industry right now, we've got some amazing, incredible women that have really, forged the way and have kind of been the pioneers for where we are now. Why do you think it's so important that these successful women begin to speak up and begin to share their wisdom, begin to share their insight, begin to share their knowledge and their life experience, and maybe take on a mentorship role for other, I guess we could call them next generation female advisors? Why is that something that's so important right now?
Great question. I love this question. So first, let me say I'm part of this is my maybe third or fourth participation in a mentor-mentee program, and I'm in one currently right now, and I'm actually the mentee in this scenario. And I specifically they asked me if I wanted to be a mentor, and I was like, I have really personally not had a mentor myself. I would love, is there somebody that would be willing to, be willing to mentor someone like myself who's, 20 plus years into her journey? Is there somebody like that? Yes, we actually have somebody, and I've been paired up with a wonderful relationship. But why that is so important, I go back to my early days in the wholesale side, and the folks that ran the organization I worked for would talk endlessly about their mentors and when they started in the business. And, back in the good old days, in the early 80s, in those, in broker-dealer insurance groups, that they just had so much fun, and they had these great mentors. And time after time, hearing these stories about the mentors, I just kept thinking, man, I want a mentor. Why can't, and I'm thinking to myself, hey, can you be my mentor? Fast forward, I had this conversation, probably about 2018, with a woman I greatly admire and respect within the industry, Judy Hoberman. And I was telling her this exact story. I said, everybody's always talking about having these mentors. I've never had one. She said, honey, all you got to do is ask. And I said, oh, okay. I didn't know that's how it worked. I thought these things sort of evolved and it just sort of happened. But she enlightened me that you just have to ask. So in answer to your question, yes, I think that having these sort of mentor relationships for women is extremely important, because most really successful folks in this industry, who are mostly men, have had that. They've had that. And so we owe it to ourselves to be able to pass that along. It doesn't necessarily mean it needs to be woman to woman, but we absolutely need to continue on with that trend and give back, essentially, to the industry.
Yeah. And I love what you just said there. It doesn't have to be woman to woman. It could be man to woman, woman to man. Again, we can learn from anybody if we're open and willing to learn. And I think that's something that's valuable that we get no matter where we are. And the farther we are on our journey, the more knowledge we have to share. But what I find is the farther we go down this path of learning this industry, we discover there's things we still don't yet know. And being able to have a mentor in our life at any stage of where we're at, and learning from the people that are still ahead of us on the journey, can be incredibly valuable. So Absolutely. If I think about the industry, Marti, as we get ready to kind of wrap up this session here, if I think about the industry as a whole, and specifically because it's still predominantly men in these roles, what do men need to think about that are working in this industry today to make sure that we've got an inclusive environment where women are seen as equals, where women are given opportunity? What do men need to be doing more of they're not doing to notice and pay attention to and give opportunities to the women that have more to contribute, but maybe just need a little bit of encouragement or just a little bit of nudging to step into that next step in their journey?
Yeah, I love that, John, because I think you're right. I think it's more about just needing a little bit of nudging. I don't think that there's lack of opportunity. I don't think that there's, especially today, years ago, maybe it was more of a boys' club, but I don't necessarily feel that way now. I feel like there's opportunity out there for everyone. And going back to, the statistics you're talking about earlier about all the trillions of dollars that are going to be coming into the hands of women, that doesn't necessarily mean that those women all want to work with a woman producer either. There's many women that feel more comfortable working with a man when it comes to financials. However, it behooves you to have an option within your firm, right? So as a business owner, I think it just makes absolute sense to bring on, to diversify your team a bit, and just and for the sake of your clients, right? So we all know this. Anybody that's ever had clients as part of their working life knows that you're not for everybody, right? And that's okay. That's okay. And to be able to say, you know what, this we're just not connecting here. I think she or he would work better with you. To be able to have somebody to pass off to is huge, because then you still keep the relationship within your organization. You're not losing it to somebody outside. And then you have the opportunity to also grow your organization with all the people that new team member is going to be able to reach that you might not otherwise have.
Yeah, some of the most effective organizations I've seen are broadly diversified. They have men, they have women, they have seasoned veterans, they have younger individuals that are up and coming, that are more technologically savvy than their older counterparts. And that ability to give the client a choice, that they can work with somebody that they're comfortable with, they feel like can take them on that journey, knowing that there are other members of that team that they can also lean on to get the knowledge and wisdom and expertise. To me, that seems to be a win
Yeah.
across the board.
Yeah, absolutely.
So, Marti, any last words before we wrap up today that you want to share?
I want to thank you for having me today. I do think that it's you're not awake if you're not seeing the opportunity that there is out here for women in our industry. We're flashing it all over the place. So what that means for your particular organization or your team, you have to decide. But I think it's definitely, an area where they're not the loudest voice screaming for the position, but it's definitely an avenue that I would explore if I was a business owner.
Absolutely. So Marti, what's next for Legacy as we're coming into this new year, 2026, in the role that you're in? What's next?
Oh, we're so excited about 2026. This is going to be a banner year for us. New carrier coming later in the year that we'll talk about. Updates to our honors program. So I encourage everybody to check that out. Significant increased opportunities as it relates to our honors program. So definitely check that out. Our relationships are more entrenched and tight. We deal with partners here, and so we are definitely working with the right groups and super excited about those new ones that have come on. So I'm just beyond excited for 2026.
Absolutely. I am too. Well, Marti, I want to thank you for being on the podcast with me today. It has been a pleasure to get the opportunity to, number one, get to know you, number two, get to work alongside you, and then now to have you on our podcast where we get a chance to allow you to share your wisdom and knowledge and expertise and talking about a topic that's passionate to you. So thank you for being with us today. And on behalf of all of us here at Legacy Marketing Group, I'm Dr. John Terry. Thanks for joining us for this edition of Tune Into Sales. Have a great day. Hey, it's Dr. John Terry, and welcome to another installment of Tune Into Sales. We love to bring this podcast to you to have an opportunity to talk with industry leaders who are making a difference throughout the United States and literally around the world. And I'm really, really excited today to have an individual I recently met and was introduced to that has an incredible story that we want to dig into. Ladies and gentlemen, I want you to welcome to our podcast today, Cathy Mendell. She is the head of Theia Financial and is the founder of this incredible organization we're going to dig into today called The Accomplished Woman. So, Cathy, thank you for joining me. I am so glad you're in the room. How did you get started, and where did this Theia Financial and The Accomplished Woman come from?
Well, first, I'm very glad to be here. And, my path into the financial services industry was not traditional. I didn't come from Wall Street. I wasn't trained in the system that was built for accumulating assets. I didn't come out of the 401k industry. What pulled me into this work was seeing capable, intelligent men and women reach retirement with savings, but no clear plan for turning those savings into a paycheck. And over time, I realized the problem wasn't the individuals. It's not the women. It was the system. Retirement planning wasn't designed around how women actually want to live. And that's why I founded Theia Financial. I work with accomplished women, and we developed the Lift Advisor Network.
So what is an accomplished woman? I know we talked about that earlier, but I'd love for the audience to understand, how do we define what is an accomplished woman? And I love your definition.
Well, to me, an accomplished woman, it doesn't have anything to do with the letters behind her name. It's that woman who she raised a family, she built a career, she managed a household, she led teams, she ran a business, she cared for aging parents, she made sure the bills were paid, and she made sure that she saved for the future. And I so respect that. That is not easy. It takes a lot of grit to do that. And so when these women get ready to retire, their goals are very different than than just accumulating more. They have a whole different set of criteria.
So, you mentioned you took a non-traditional start to getting into the financial services industry. And as you came into the industry, you probably saw, if you've been in it for any time, for a long time, this has been a male-dominated industry. How have you found yourself accepted as a woman in this industry? And what do you think women bring to the forefront that make them very unique in the area of financial planning and the unique advantages of being a woman in the insurance industry?
Well, okay, John, I came out of corporate finance in a male-dominated Fortune 500 company. Okay. So personally, it doesn't matter to me, the gender of the advisor. And in fact, I will be honest with you, it doesn't matter that much to the client either. They just want sound advice that matches what they need out of their retirement savings. So working with a woman, it's easy for me to talk to a woman because I get it. I totally get where she's at, what she's looking for. But if you're a male advisor, it's just a matter of training and understanding, what's important to that individual. The fact is that retirement has quietly, structurally, and permanently changed. Pensions have disappeared. They've been replaced by defined contribution, right? You save every other week into your 401k, and that plan was built to grow money, but it was not built to deliver reliable lifetime income. So the result is that millions of women and men are now entering retirement with savings, but they don't have a true paycheck strategy. And what they want is they want to go out of their retirement. They want to have that end of career conversation, and they want the new paychecks to begin. They want it to be seamless. They don't want to feel like they are, all of a sudden they're looking through a fog and they don't really understand, well, what do I do now? How do I take this pile or stack of investment statements and turn it into a lifestyle?
Yeah, absolutely. Well, Cathy, I know that in looking at some recent stats, I was looking at one today talking about solo agers, people that are moving into retirement alone. They're either widowed, they're divorced, or they've chosen not to get married, or they're geographically separated from their children. And about half of that cohort is women.
Yeah.
And as we think about women, and I think about my wife, my wife has been a stay-at-home mom for many, many years. She has 2 college degrees. She has a degree in creative writing and a degree in English. But she voluntarily chose to step out of the workplace to be a stay-at-home mom. And as a result of that, looking at the challenges that she would be facing in the event something were to happen to me and she goes into retirement alone, that's a big deal. But a lot of women today are really dealing with those same issues, the challenges of taking time off to, help raise a family, maybe not earning as much as their male counterparts. And as they're getting ready to walk into retirement, that's a challenge for them. How do we address that today?
Well, you know what I find, John, is that you would be surprised that more and more women are actually not only at the table when you're talking about this, but they're actually decision makers. If they have been lucky enough, privileged enough to be home and to be able to focus their attention on a family, that's a wonderful thing. But more than half, I would say 75% of women, that isn't the case. They have been in the workforce and they have been looking to the future that someday They would be able to transition into a lifestyle that they could lead their life the way they want, have the time off that they want, be with the people that they want. But they don't want to do that if they don't know if they're going to be okay. This is true if something happened to you, you got hit by a bus, okay? And your wife suddenly has, the assets. She's going to be looking to somebody that's going to know how to plan for income, how to have investments that support that income. She's going to want to understand how the taxes work on her income. She's going to want to understand healthcare. She's going to want to know how to pass assets along. I think retirement planning has fundamentally shifted. It's not about selling stuff. Okay. This is about creating a plan that somebody can sink their teeth into, understand, and move forward with confidence in their retirement. The last thing they want to do is to feel vulnerable at this stage of life. In other words, I've had women say to me, well, my advisor said, we're just going to switch your accounts to more conservative. And then we'll take a withdrawal every month and you can go ahead and start your Social Security. That was the end of the plan. Okay. There was no Roth conversion conversation. There was no tax conversation. There was no health care or Medicare or any of that. It was all disjointed. Go and talk to the Medicare person. Go and talk to your CPA. Go down to the Social Security office and get information. I feel like that is a thing of the past. If you're going to be advising people about their income solutions for retirement, you need to understand how all of those things interact. And that's what people are looking for today. They want something that's comprehensive and that they can look at it and say, we have got all the bases covered. And the best part is, I don't feel vulnerable. If the market tips over, I'm not out on the street. Okay. I don't have to worry about losing my life or not being able to live my lifestyle because of things that are not in my control.
Sure. Yeah. Well, Cathy, along those same lines, going into a Sorelli study that's come out, and we've seen now the initial number of this incredible wealth transfer that's currently taking place as the last of the silent generation goes to meet their maker, and the boomers begin to also transition into, the world of what's next for them. But the big thing that we're seeing here is there's about $124 trillion that's currently in motion. And all the studies seem to say that more than half of that wealth is going to be transferred to females. And as a result of that, we're seeing this incredible opportunity for women, maybe who haven't been decision makers or they've been co-decision makers. Now they're in that primary role by themselves. How does this great wealth transfer shape how women are planning for retirement, how they're thinking about retirement, and maybe causing them to recognize some needs they didn't realize they had in terms of extra planning?
Well, that's a good question because it is the great wealth transfer. It's just the nature of what happens when one generation ages, right? But you've also got a wealth transfer happening in another way. You have women who are selling businesses and who are selling real estate that they own. They're inheriting from their parents. If a spouse passes away, whatever the spouse has typically goes to the surviving spouse, right? So there's money in motion all the time. The opportunity is enormous, but so is the responsibility of the advisor. Suddenly, that person is expected to be able to manage all this, manage risk and taxes and longevity. And if they don't have a roadmap, if they don't have a process that they understand, if they're not working with somebody that can say, first, let's make sure that you can live the way you want to live. Let's talk about what your monthly income needs to be for you to be completely comfortable going forward in your life. Let's solve for that. Then let's figure out how the investments can work. Women aren't that impressed with performance bravado. Many men make their decisions about where to invest based on an asset track, okay, of that investment. Women are not. They're more interested in how the investments are going to translate into them having the peace of mind in their retirement to not worry about things that they can't control. So it first comes to helping that person design their lifestyle. The second thing then is the investment side of it. Where do you put the money? The allocation, what should it be? Should it be all in the market, or should it be some guarantees? How does that need to happen? Some of that just comes with understanding and talking to the individual. But at the end of the day, what they're looking for is a comprehensive plan that really takes into account how they're going to pass money to their kids, how they're going
Absolutely.
to give to charity, how they're going
Yeah.
to have an income, all of those things. Yeah.
Yeah. So Kathy, really what you're saying is it's about having a conversation to really understand what is important to that individual and what they want their life to look like after they retire.
Absolutely. And things that I hear over and over again, and it doesn't matter how much money they have, John. This is universal. I hear things like, I don't want to lie awake when the market drops.
Mhm.
I don't want to lose sleep over that. I can't fix that.
Right.
I need to know that my essentials are covered no matter what for the rest of my life. I want an income that is going to be there just like my paycheck was. I have worked too hard to be anxious now. And we hear that all the time. These aren't hypothetical concerns. They are the emotional reality behind every balance sheet that we review.
So Kathy, when we're talking about retirement, I love the fact that you keep bringing up guaranteed income. And specifically as you're working with women in the women's market. Uh, why is guaranteed income often overlooked in the financial services industry as we're talking retirement planning? And why don't we see more financial advisors using a guaranteed income product to provide that base that individuals need once they retire so they take that risk off the table and they don't have to worry?
Well, that's a good question because this right now, I'll tell you what the biggest factor will be in advisors opening their mind to guaranteed solutions is when their $2 million client leaves and goes to somebody else. Okay. that's a big motivator. It's like, what?
Yep.
But when used properly, fixed indexed annuities can be a powerful tool. What it does is it builds a reliable ongoing income. One of the things that I do with our own clients is I ask them this question: what's more important to you? Which ROI? Reliable ongoing income or rate of return? Okay, what's the most important? They always say reliable ongoing income because that's what makes your month to month, the day work. Okay, so what we believe is that first you build a reliable income foundation, and you do that through optimizing Social Security, pensions when they're available, VA benefits, whatever they have, and then carefully selected annuity or structured strategies that will answer these questions. One, are my lifestyle expenses covered for life? If you have a income annuity that has a guaranteed benefit, the answer to that question is yes. Can I maintain my independence without constant monitoring? The answer is yes. Do I have a paycheck that I can count on? The answer is yes. So in our retirement planning, I actually separate out here's what's guaranteed, here's what's variable, so that they can see it clearly, no surprises. And that just creates a foundation. And that foundation is the foundation of that individual's lifestyle.
So as you're doing income planning, you're looking at the assets that they've accumulated. You're looking at Social Security. You're looking at, in the event they may have a pension or some other asset that's out there. You're looking at all those in combination. So it's not just like you said earlier. It's not just, well, we're going to go conservative and go see your Social Security guy and get your Social Security check and you're done. It's part of a strategic plan, making sure that it's effective, it's efficient, but also tax effective, I'm assuming.
That's right. And what happens is when a person sets an appointment with us, okay, and they share with us, okay, here's what I have, here's what I've accumulated so far. They're going to have probably a 401k, maybe an old 401k. They're going to have some rollover IRAs. They might have a TSP account. They're going to have an inherited account they got from their mom. They're going to have a brokerage account that they have. They're going to have some CDs and some savings. They want to bring order to that chaos.
Yes, they
Okay.
do.
So that's one thing. Then you've got, okay, how do we pull this apart, put it together so that we have a tax strategy that handles all of this tax deferred money, that we have an income strategy that makes sure your income is right. That includes the Social Security claiming strategies. That includes pension strategies or VA benefits or anything that's got a guarantee written behind it. If they don't have the guarantees, boy, I'm telling you, we find guarantees. We find annuities that will guarantee no market loss, no fluctuation that way, or a guaranteed lifetime paycheck. You've got to have a place to go that when the markets are not cooperating, you are not drawing an income from a portfolio that's gone down. That's the fastest way to ruin a retirement, to put your future at risk, and to create angst inside of that person as they're watching this happen. And women don't like being out of control. Okay. And John, you might be able to agree with that. We don't like that. We don't like things happening to us that we can't fix. Okay.
Right.
We want to know we want to know what's going to happen, and we want to know what's variable. I always say, let's put money. Oh, absolutely. What's not needed for income. Let's put that into the market. Let's get it growing. You sweep money out of there to travel. You put granite in the kitchen. This is money that you have to support you during, if you have a health event. That's what that money's for. But we're not taking income out of that bucket because we can't count on consistent. I mean, nobody beats the market every year. Okay. And when the market goes up, that's great. When the market's down, that's not so great. You just don't travel that year. Okay.
So how do you address inflation as you're doing planning? As you look at the fact that today's retirement, is not my grandfather's, that, he lived, 10 or 15 years and he's done. Today, typical retirement's 20 to 25 years or longer. How are you building inflation protection into these guaranteed income plans?
Yeah, that's a good question because so some things that they have may already have an inflation factor built into them. Social Security does. Social Security. Yeah. And if they have a pension, many pensions have inflation factored into it. But you can, if you're using a guaranteed lifetime product that has a income benefit, I like to select the highest payout first instead of waiting, taking the inflation. That's just my own personal preference because we never put all the money there. We have another bucket of money. It is important that that money is growing. It's important that it's available for longevity, for increased income needs. But you also have to remember, for many people early in retirement, they're spending a lot.
Yes,
they're doing the big travel.
Yeah.
Okay. Later in retirement, they're downsizing their homes. They might have some health events that they're dealing with. That's why understanding healthcare and Medicare and supplements and all of that, you don't have to sell it. You just got to know it. You got to know that your client's not going to have a big surprise of, losing a large portion of their savings because they didn't have a good plan. That's where life insurance comes in. That's where a trust comes in and estate planning. All of those things are part of the whole picture. Inflation, absolutely. You have another pool of money. If the money isn't going as far as it used to, we turn on another source. Okay? Because we've got another source.
Right. I like it. So how do you also deal with declining health issues? Because as we get older, oftentimes, like my parents now, we just recently had to put my parents in assisted living. Dad's about to turn 90, mom's 87. They lived a great life. And, talking about spending money when they were younger, as soon as mom and dad both retired, they said, well, what are we going to do? I said, well, go enjoy life. Well, for the next 3 or 4 years, I'm getting pictures of, mom and dad at, Panama Beach, which they'd never been to, and places they'd always talked about going. And every time dad would send me a picture, a little text message below it, it says, I'm spending your inheritance. I hope that's okay. And that became the standing joke around the house is that dad go spend all the money. It's all right. But now they're at a point in their lives that they're dealing with dementia and they're dealing with the inability to deal with ADLs. As we get older, that happens. How are you building that into the plans that you're doing so that doesn't become a problem, or if it does, there's a solution in place?
Yeah, there is. So, this is one that becomes, this is a conversation that has to be had. And a lot of times when you're working with somebody who's freshly leaving a career, it's on their mind, but not really. It's way off in the future, right? Unless they have a parent who is dealing with this. And then they understand how devastating this can be financially. So as an advisor, that is one thing that I keep my eye on. I look at the whole picture. So if your client has a strong Social Security, by the way, that continues to pay when they're in assisted living, if they have a pension, they'll still get it. If they have a lifetime income annuity, they'll still get it. But what about the other costs? What if that doesn't cover everything? That is why it is so important to have other sources. As an example, do they have long-term care? something they can turn on? Do they have a life insurance with the long-term care rider where they can pull some of that death benefit forward? Do they have an asset-based long-term care plan? Do they have a home that they've paid for? $800,000 they can sell it for. That's a big chunk of money to help pay for their care as they age and go through that process of life. So as an advisor, you've got to keep your eye on that ball. You can't just be selling stuff, right? And then walking away because they're counting on you and you want to be aware of it and you're going to fix it when you can. Unfortunately, some people don't have the resources and other decisions will have to be made when those times come. But if you're working with accomplished women, first of all, they care about this. Okay, they do care about this. They know it. They've seen it. They've experienced it. And they do want you to have some solutions for them.
Absolutely. Yeah. And many of the fixed index annuities today also offer an income doubler that will give you the opportunity to get double income in the event.
Yes, absolutely. If I have somebody that I've set up a $40,000 or $50,000 a year income and they can double that for up to 5 years, that goes a long way.
Yes,
that adds another $3,000 or $4,000 a month to the income pool to help them cover some of these expenses.
Yeah.
So
and that can make
absolutely
the difference between staying in assisted living and having to go to a nursing home. That can be a huge factor there in that.
Yes. Right.
Absolutely.
Yep.
So how do women view fixed indexed annuities as we look at the landscape that's out there? Do women seem to gravitate to fixed indexed annuities more than men do? Because what I've typically seen and heard from a lot of advisors is as they're working with husbands and wives, the men tend to be a little more aggressive than the women when it comes to looking at where do I put the money? Like you mentioned earlier, they're looking at the asset performance, not what can it do for me. So where do annuities fall in the grasp of women loving, hating, not liking, neutral? Where are they?
Well, I think, first of all, the conversation is shifting because the
I agree.
entire
Yeah.
401k industry is going to be adding annuities to their offerings. Okay. They are really promoting them. It's everywhere in the news. But the other thing that you want to remember is women are focused on the outcome, not on the performance. They don't care that much they do care about performance. Don't get me wrong. They do want their money to grow, especially the money that we have outside of the annuity. But they're looking for, if I can place them in an annuity, that's going to give them an 8 or 8.5% withdrawal on those dollars that will last through their lifetime. That's much better than what I can do out of the market. But the other thing I want you to really remember is they're looking for the solution, not the product.
Right.
So
Exactly.
it's like if I go see the doctor and I tell the doctor, I want to lose weight. Okay. And I'm talking to the doctor about that. And he starts telling me, well, how about Ozempic or Mounjaro? Or, I've got this tablet or pill you can take, or maybe you should go on a diet, or maybe you need to, and they start throwing all these solutions out. I don't know what I want. I want to lose weight. Okay. You tell me what to do. When we talk about annuities, I don't go into the caps and the spreads and blah, blah, blah. They don't care about that. What they care about is, okay, if I move 500,000 here and I am going to be done working in 3 years and I'm going to turn on my Social Security and this is going to give me 50,000 a year. So I have 85,000 a year of guaranteed income. Yeah, that works. That's what they're looking for.
Exactly. Yeah. When I sit down and talk with clients today, I like to identify what is it you want your money to do for you. And once you can identify what you want their money to do, and then we go to the product and think of that as a tool that we use to solve the money problem they've presented. And we say, does this solve your problem or does this get you to the goal that you want? Once they say yes, they've leaned into the solution because it gives exactly what they want, the outcome that they desired.
Yeah. And a lot of times people don't know how to answer that question. The way that I like to ask the question is, how much income do you need coming in every month to live really well? And they say, okay, I need, I bring home 7,000 a month right now, and I'd like to actually have a little bit more. All right, you want 8,000 then net. Okay, now we're going to back into that. What do we have that we know of? And then we figure out what the gap is. And then we figure out how we're going to fill that gap. And there's only 2 ways in the market that you can draw income off. You either sell the appreciation or you get it off of yield. And the question of that, when the 4% rule was put into place, bonds were paying 7 or 8%, and you could draw 4% and just take those bonds, and the appreciation really never came into the equation. That is not the reality today.
That's right. Yeah.
If I need 50,000 a year and the market goes down 20%, my withdrawal is going to be more than 4% to get the same 50. I can't just not pay my bills. Okay. So you've got to have a really good understanding of how the income plan plays a role in that person's monthly life experience in retirement. And that's really where the planning comes into play.
I love it. Cathy, this has been a tremendous conversation. And I want to say thank you for your time and being with us on the podcast today. Now, if there are other women advisors that would love to say, man, I'd love to have a conversation with Cathy and learn more about what she's doing and maybe connect with her to change the lives of other accomplished women they're working with, how do they find you?
Oh, absolutely. You can contact me at Cathy, spelled Cathy, at Lift, Lift, advisor.net. Send me an email and I'll get right back to you.
Very good. So, Cathy, any parting comments, anything I should have asked you, I didn't ask you that you'd love to share as kind of a wrap up for today's podcast?
Well, I think I just want to say this to end. Women are not a niche. Okay. They're the future of retirement planning. Men, when they're accumulating assets, they have this, performance bravado. But when it all comes right down to it, everyone needs the same thing. We need an income we can count on. We need assets that are growing, and we need to know we're good long term. So if you're working with couples, the conversation, very honestly, when you get right down to it, I built a very large company doing this exact thing with more than 50% of my clients were couples. The conversation was the same. Everybody wants the same thing. They want enough money coming in that they don't have to worry about anything. And I would say, it's not a product strategy, it's a mind shift. Build income first, let everything else follow.
Man, with those are some great words to end on. Cathy Mendell, thank you for being with us today. Thank you for what you're doing to make a difference in this industry and really bringing enlightenment to an area that's often been overlooked or ignored. So on behalf of all of us here at Legacy Marketing Group, I want to say thank you for joining me for today's Tune Into Sales podcast. If you've got questions or information or things we can do to help you, you can visit us at legacynet.com. And Cathy, one more time, how did they get a hold of you?
Cathy at liftadvisornetwork.com.
Perfect. Very good. Ladies and gentlemen, on behalf of all of us here at Legacy, thank you for joining us. Have a great day.